USD is on the rise right now. That means US dollar is very, very strong. And that is as a result of the fact that we see the US CPI and the core CPI data that was released this week, Wednesday, and it come out to be very, very good for USD. This is very important, and this is the reason why we are seeing a very drastic increase in the price of the dollar to the downside, as you can see on the USDJPY right here, and also on gold. We've seen this very spike to the upside and a drop back to the downside. So what that also means is that market is going to change direction in next week of trading. So I'll be talking about this weekly wrap up in today's video. So watch this video to the very end. If you are new to this channel, my name is Paradise. On this channel, I discuss everything about Forex, day trading strategy to make you profitable. Please don't forget to support this channel by leaving a like for this video, subscribe, and turn on the bell notification for more updates like this. Also check the channel for other Forex videos and the educational content. Right here on Forex Factory, we see the US CPI, that's the Consumer Price Index, right here for the month over month and the year on year. All of them seems to come out very, very good for the US dollar. Okay, so if you look at this very year on year, we see the previous, which was on 12th of March, and it was 3.2%. and it came out to be 3.5% this very month. If you look at the month on month right here, you see the market was 0.4 and it came out to be 0.4% in this very month as well. But what we're looking at right here is the fact that it was higher than the forecast. So when it's higher than the forecast, it means that it is good for the currency. And that is why we see this very drastic drop in the price of Euro USD to the downside. That means dollar is increasing in strength and market come back to the downside. That was on Wednesday, on Thursday, and also on Friday, right at this very point. What I am expecting on this very chart, Euro USD, is the market to continue this downward movement to the downside. But in as much as we are going to see this movement to the downside, we're also going to pay attention to in between retracement. What that means is as the market continue this movement to the downside, we're also going to see the market ease up. Okay, so market move down, ease up, market move down, ease up, as we see a long move downward. So this is what I am expecting right now on this very chart. And one other thing we need to pay attention to is the fact that the Federal Reserve, the person of Jerome Powell as the chairman, is not going to back down on his 2.5% goal on year-on-year CPI before we will begin to see a change in the federal fund rate. That means I am also expecting that the next federal fund rate decision is going to be the same. That is, Fed is going to keep interest rate unchanged, and if that happens, we're going to see a little increase in the price of euro, that is for euro US dollar. For euro USD, market is going to move upward and then a quick decline to the downside. That means the USD is going to still maintain its strength. So on the immediate short term, if you go back to the 4-hour chart, expect the market to come back to the downside. Okay, so what I am expecting right here is this movement downward. Market should continue this movement from here to the downside a little bit. Then we're going to see the market find retracement between this level of 1.0545 and this very level of 1.06011. So between this very area, expect retracement between this area to the upside, and then to this very point, continuation to the downside. What this means is for Euro USD, you should pay attention to selling off. Okay, so you sell the market, taking sell position instead of buying the market, because even though you see the market begin to move to the upside, that very movement is just a retracement before continuation to the downside. So after this movement downward that we are seeing right now on the chart, expect the market to retrace and then continuation to the downside. So it will be nice or wise for you to take a sell position after retracement for the market to move back down, because from the 1-day chart, markets still have enough more strength to move to the downside. If you look at this, the candles are very aggressive, and market is going to still come back down as we approach next week, or as we resume next week of trading on Monday. This is what you must have to pay attention to right now on your chart on EURUSD. And on gold, that is xauusd right here. I've been talking about this market moving to the upside, and I talked about a little retracement before continuation. That market did not really retrace as expected. If you go back to the 4-hour chart right here, I was expecting this market to retrace significantly to the downside into this very area. If you watch that very video, this very area of important resistance, which was support at this very point, and this other level at this very area. These are the two areas or critical points I was expecting this market to retrace into before continuation. But what we see was a little bit different from that very analysis. I was expecting that this market moved down into this area, but market did not come into this very zone. What we see was the market retrace a little bit and they begin to move upward as a result of the impact from this very CPI data that was released on Wednesday this week. So what that means for us is that the market went a little bit upward, and then a little grab of liquidity, and then from here a drastic movement to the downside. What this means is the market is going to change direction very soon on gold, and what you need to do to confirm that change in direction on gold is a break of structure. What that means is if the markets, as we resume on Monday, move down and then break this level right here of support, and then come back down into this very level, and then move upward, and then fail to create a new low, then the next move is going to be a straight downward move for gold. And what you need to pay attention to is a fail swing. A fail swing, which means that the next move from this very area should not create a new high. That means there should be a failure of the market creating a new high at this very point before the market is going to come back down. Remember, the new high is at this very area, and I am expecting that the market have a failure of creating a new high, then the market is going to come back to the downside on gold. So this is what you need to pay attention to right now on the gold chart. This very area of support right here, which is very important on the chart, right at this very point, and this other area of support as well at this very point is a very critical location where I am expecting the market to move into, and then failure to create a new high, market is going to come back to the downside. And as we see the market come back down, then that means we are going to break this very structure of support, which is an indication that market is going to move to the downside for the next week of trading. So this is what you should have to look out for and pay attention to. Look at it and see how it applies with your strategy right now on this very chart. So this is very important, guys, as we wrap up the week for the next week of trading. And on USDJPY, like I said, still expect the market to come back to the downside for the next week of trading. Please support this channel by leaving a like for this video, subscribe, and turn the bell notification on for more updates like this. Also check the channel for other forex videos, educational content, and technical analysis. If you've not registered with any broker, I have a recommended broker for you in the description of this video. Check and follow the link below in the description. Thanks for watching today's video, and I will see you in the next video.